Hello students, in present video I am going to explain about 11th problem from company accounts topic. I am taking this question from advanced accountancy subject BCom second year semester 3 Pankaj publications book. Previous videos links are available in the description box. Let us see the question first. 11th problem. A limited company has an authorized capital of 5 lakh rupees divided into shares of 10 rupees each. Of these, 8,000 shares were issued as a fully paid in payment in building purchased. 16,000 shares were issued to the public, rupees 5 being payable on application, 3 rupees on allotment and 2 rupees on call. The full amount due on the shares was received except from a holder of 750 shares on which only application money was received. His shares were forfeited after giving him due notice. Subsequently, these shares were reissued at 7 rupees per share. Give entries to record the transactions in the books of the company and show how they would be shown in balance sheet. This is the question. Let us see the solution for this. Let us understand the question first. There is one limited company, public limited company. Its authorized capital is 50,000 shares at the rate of 10 rupees each, 5 lakh. Here 10 rupees known as face value of the share, par value of the share. Issued capital, company issued 16,000 shares to public at the rate of 10 rupees each. And company purchased 80,000 worth building. In return, instead of paying money, company is issuing 8,000 shares at the rate of 10 rupees each. So total issued capital is 80,000 plus 1,60,000, 2,40,000. So don't think that company issues the shares for cash only. Sometimes company issues the shares for consideration other than cash. Means what? In present problem, company is buying one fixed asset. Instead of paying money, company is issuing shares. Suppose at the time of incorporation, when company takes services from promoter, instead of paying money, company may issue shares. Similarly, sometimes company may take some services from professionals. For example, from lawyers, company took some service. Instead of paying money, company may issue shares. Means company is getting some consideration from other party. Consideration means some benefit. For example, buying building, getting incorporation services, getting legal services. And instead of paying money, company is issuing shares to them. This is known as issue of shares for consideration other than cash. Next, subscribed and called up capital also same. Public applied for all shares, 16,000 shares, company allotted all shares to them. And called up capital is also same. One share face value is 10 rupees now. Company wants to collect that money in 3 installments. With application money 5 rupees, allotment money 3 rupees, call money 2 rupees. And in present year only company made all calls. Therefore, called up capital is also 16,000 into 10 rupees, 1,60,000 plus that 80,000, total 2,40,000. On 750 shares, company received only application money. So, these shareholders are not paying allotment money and call money. So, their shares are forfeited and the company reissued these shares at the rate of 7 rupees each. This is the question. Let us see the journal entries first. First entry is for purchasing building and issuing shares. Company is buying building from the sellers. Building, asset no? Assets come under real account. Real account rule, debit what comes in, credit what goes out. As building is coming to us, we have to debit building account. Amount, company is issuing 8,000 shares at the rate of 10 rupees each. Means building value is 80,000. 2. In return, company is issuing shares no? So share capital increases with 80,000 rupees. Share capital is a liability. Liability shows a credit balance. Therefore, we have to credit share capital account. 80,000 worth the shares are issued. No? So capital is increased by 80,000. Therefore, credit 80,000 rupees. Journal, serial number, particulars, debit, credit. First entry, building account data to share capital account. 80,000 worth building company purchased. In return, company is issuing 8,000 shares of 10 rupees each. Mention that as a narration. Being 8,000 shares of 10 rupees each issued to seller on purchase of building. Next come to application related entries. First cash received entry, then transfer into capital entry. From applicants on 16,000 shares at the rate of 5 rupees each, application money is coming. That amount is deposited in bank account now. So bank account is a personal account. Personal account rule, debit the receiver, credit the giver. Bank is a receiver, therefore debit bank account. Bank account data, 16,000 shares into 5 rupees each, 80,000 rupees coming. 2. Applicants paid this 80,000 rupees. Company is taking loan from them. In future, company should return this 80,000 rupees to them. So for 80,000, applicants are creditors. Creditor is a liability. Liability shows a credit balance. Therefore, applicants' names we have to credit. Instead of writing all applicants' names, we write share application account. To share application account. Amount same, 80,000 rupees. Second entry, bank account data to share application account. On 16,000 shares at the rate of 5 rupees each, application money came now. Mention that as a narration. Being application money on 16,000 shares at 5 rupees per share received. Next entry is for transferring application money to capital account. When we transfer application money to capital account, application account will get closed now. By crediting, we have created that account. If you want to close, you have to debit. Therefore, debit share application account. Share application account data. We have created application account with 80,000 now. So we have to close with same amount. Amount is 80,000. 2. That 80,000 we are transfer into share capital. So share capital is a liability. Liability shows a credit balance. Therefore, share capital account we should credit. To share capital account. Amount same, 80,000. Third entry, share application account to share capital account. On 16,000 shares at the rate of 5 rupees each, 80,000 rupees application money we are transfer into share capital now. Mention that as a narration. Being share application money on 16,000 shares at 5 rupees per share is transferred to share capital account. Application related entries are over. Now come to allotment related entries. First transfer entry we should write, then money received entry we should write. First transfer entry. So from applicants on 60,000 shares at the rate of 3 rupees each, 48,000 rupees should come. So for 48,000 rupees, applicants are debtors. Debtor is an asset. Asset shows a debit balance. Therefore, applicants' names we have to debit. Instead of writing all those names, we write share allotment account. Therefore, share allotment account debtor. Amount 16,000 shares into 3 rupees each, 48,000 rupees. That amount we want to transfer to share capital now. Therefore, like third entry, credit share capital account. Amount same, 48,000. Fourth entry, share allotment account data to share capital account. On 16,000 shares at the rate of 3 rupees each, share allotment money we are transfer into share capital now. Narration, being share allotment money on 16,000 shares at 3 rupees per share is transferred to share capital account. Fifth entry is for receiving allotment money. On 16,000 shares at the rate of 3 rupees each, 48,000 should come. But on 750 shares, allotment money is not coming. 750 shares into 3 rupees each, 2,250 is not coming. Then finally, 45,750 only came. That amount is deposited in bank. Bank is a receiver for this amount. As per personal account rule, bank account should be debited. Bank account debtor. Amount 45,750. 2. In fourth entry, we wrote that applicants are debtors for 48,000 rupees. Now from applicants, 45,750 rupees came. For 45,750, applicants are not debtors. We have to cancel. By debiting, we have created. If you want to cancel, you have to credit. So credit share allotment account. Amount same, 45,750. Now observe one point. Share allotment account is debited with 48,000 but credited with 45,750. So the difference 2,250 is debit balance in share allotment account. So share allotment account is not yet closed. It is showing a debit balance of 2,250. Fifth entry, bank account data to share allotment account. Allotment money should come on 16,000 shares. But on 750 shares, company failed to collect the allotment money. So 16,000 minus 750 on 15,250 shares only at the rate of 3 rupees each allotment money is coming. mention that as an addition. Being allotment money on 15,250 shares at 3 rupees per share received. Next come to call related entries. First transfer entry, then money received entry. Only one call is there. From applicants on 16,000 shares at the rate of 2 rupees each, 32,000 rupees should come. So for 32,000 rupees, applicants are debtors. Debtor is an asset. Asset shows a debit balance. We have to debit applicants' names. Instead of writing their names, we write share call account. Share call account debtor. Amount 16,000 shares into 2 rupees each, 32,000. 2. Share call money we want to transfer to share capital. Share capital is a liability. Liability shows a credit balance. Therefore, we have to credit share capital account to share capital account. Amount saved 32,000 rupees. Sixth entry, share call account debtor to share capital account. On 16,000 shares at the rate of 2 rupees each, share call money we are transfer into share capital. No, mention that as an addition. Being share call money on 16,000 shares at a 2 rupees per share is transferred to share capital account. Next is seventh entry is for receiving call money. On 16,000 shares at the rate of 2 rupees each, 32,000 should come. On 750 shares, call money not came. 750 into 2 rupees each, 1500 is not coming. Finally, 30,500 rupees came. That money is deposited in bank. Means bank is a receiver here. As per personal account rule, bank account should be debited now. Therefore, bank account debtor amount finally 30,500 rupees coming now. That amount. 2. In sixth entry, we wrote that applicants are debtors for 32,000 rupees. Therefore, we have debited share call account. Now they paid 30,500. For 30,500, applicants are not debtors. We have to cancel. By debiting, we have created. If you want to cancel, you have to credit. Therefore, to share call account. Amount same 30,500. Here also observe one point. Like allotment, share call account is also not yet closed because share call account is debited with 32,000 but credited with 30,500. So there is a debit balance of 1,500 rupees in share call account. Seventh entry, bank account debtor to share call account. On 16,000 shares, company has to receive the call money. But on 750 shares, company failed to receive the amount now. Therefore, on remaining shares, 15,250 only at the rate of 2 rupees each, call money is coming. Mention that as an addition. Being call money on 15,250 shares at 2 rupees per share received. Next entry is for forfeiture. On 750 shares, only application money came. Company forfeited those shares. See, in first entry, share capital account is created with 80,000. So roughly I am showing capital account here. Capital account is created with 80,000. In third entry, capital account is created with 80,000. Again, in fourth entry, capital account is created with 48,000. Next, in sixth entry, capital account is created with 32,000. Total 2,40,000. In this, 16,000 shares are issued to public, 8,000 shares are issued to the seller of building. So total share capital is 2,40,000 rupees. In this, 750 shares at the rate of 10 rupees each forfeited now. Means 750 into 10 rupees, 7,500. Capital we have to cancel now. So by crediting, we have created share capital account. If you want to cancel, you have to debit. Therefore, share capital account we should debit. Share capital account data 750 shares at the rate of 10 rupees each, 7,500. 2. On these forfeited shares, company received application money at the rate of 5 rupees each, 3,750. This amount company will not refund to them. Means this is capital gain to the company. Capital gain comes under nominal account. Nominal account rule, debit all expenses and losses, credit all incomes and gains. Therefore, gain we should credit. We should credit this amount by creating a separate account known as share forfeited account. To share forfeited account. Amount, received amount. on 750 shares at the rate of 5 rupees each. Application money is coming now 3750. Next, share allotment account, share call account. These two accounts are not yet closed now. In share allotment account, there is a debit balance of 2250. In share call account, there is a debit balance of 1500. Debit balances means what? In books we wrote that from applicants on allotment 2250 should come. For 2250, applicants are debtors. Debtor means asset, that is why debit balance. Call money also same. From applicants 1500 call money should come. For 1500, applicants are debtors. Now these shares are forfeited by the company. Means from those applicants these amounts will not come in future. Means we have to cancel that debtor account now. By debiting we have created debtor account. If you want to cancel, you have to credit. Therefore, credit share allotment account with the debit balance in share allotment account. See, share allotment account. In fourth entry we have debited with 48,000. In fifth entry we have credited with 45,750. So debit balance is how much? 2,250. That amount now we are cancelling. How this 2,250 comes? 750 shares at the rate of 3 rupees each. 2,250. Similarly, cancel the debit balance in share call account to share call account. Observe sixth entry, share call account is debited with 32,000. In seventh entry, share call account is credited with 30,500. So the debit balance is 1500 rupees now. Now that debit balance we are cancelling. Therefore, to share call account 1500 rupees. Calculation, 750 shares at the rate of 2 rupees each. This is forfeiture entry. Eighth entry, share capital account debtor, to share forfeited account, to share allotment account, to share call account. 750 shares related capital amount we are cancelling by debiting share capital account. On 750 shares, application money came now. That amount we are transferring into share forfeited account. The amounts which we are not receiving on 750 shares, allotment money, call money, these two amounts we are crediting to share allotment and share call account. Mention that as a narration. Being the forfeiture of 750 shares of 10 rupees each fully called up for non-payment of allotment money at the rate of 3 rupees each and call money at the rate of 2 rupees each. Next entry is for reissue of forfeited shares. 750 shares are reissued at 7 rupees each. In books we wrote that 750 shares are issued for 10 rupees only. At a face value only they are issued. But from public, on one share 7 rupee only we are collecting. So 5,250 only is coming. That amount we are deposited in bank account, that is our assumption. So bank is a receiver for 5,250. Therefore, as per personal account rule, debit bank account with 5,250 rupees. In forfeiture entry, we have debited share capital account with 7,500. Means from total share capital money, we have cancelled 7,500 rupees now. Now these shares are again issued. Means again capital is increasing. Capital is a liability. Liability shows a credit balance. Therefore, again we have to credit a share capital account with 7,500 rupees. Now the difference is what? Loss. See, in books we wrote that 7,500 rupees coming in reissue. But actually how much is coming? 5,250. So the difference 2,250 is a capital loss to the company. That amount, in share forfeited account there is a credit balance of 3,750 now. From that account we have to adjust this amount. Therefore, the 2,250 we have to debit to share forfeited account. Ninth entry, bank account debtor, share forfeited account debtor to share capital account. 750 shares are reissued. Again capital is increased by 7,500. That is why capital we are creating. Cash is coming 5,250. So bank account is debited with 750 shares at the rate of 7 rupees each, because company reissued the shares at 7 rupees per each. And the difference, nothing but discount loss, we are adjusting from share forfeited account by debiting share forfeited account. Mention that as a narration. being 750 shares are reissued as 10 rupee paid up for 7 rupee per share, and the discount loss 750 shares into 3 rupee is equal 2250 is adjusted from share forfeited account. Now the last entry, 10th entry, is for transferring the credit balance of share forfeited account to capital reserve account. See, in forfeiture entry, we have created share forfeited account with 3750. In reissue entry, we have debited share forfeited account with 2250. So the difference 1500 is a credit balance in share forfeited account. Now that balance we have to transfer to capital reserve. Thus, we are closing share forfeited account. By using one formula, we have to calculate that balance amount. See, formula is amount received on forfeiture of shares 3750 application money came now, divided by number of shares forfeited 750 shares into number of shares reissued 750. So 750 cancel. Now 3750 in outer column minus reissue discount. So 750 shares are issued at 7 rupees each. Face value is 10 rupees. So on one share discount is 10 rupee minus 7 rupee, 3 rupees. On 750 shares total discount is 2250. Then difference 1500 is credit balance in share forfeited account. That amount we should transfer to capital reserve. So when you transfer like that, share forfeited account will get closed. 1500 is credit balance in share forfeited account now. If you want to close that, you have to debit share forfeited account. Share forfeited account data 1500 rupees. 2. We are transferring to capital reserve now. Therefore, credit capital reserve account. Amount same 1500 rupees. So journal is completed. 10th entry, share forfeited account data to capital reserve account. So the credit balance of share forfeited account we are transferring to capital reserve now. Mention that as an addition. Being the credit balance in share forfeited account is transferred to capital reserve account. Take a screenshot of journal. So journal is completed. Next come to balance sheet. See, this is balance sheet. Balance sheet of limited company as a dash. Liabilities amount, assets amount. First liability side. Under share capital heading, we have to show different categories of capitals. First one, authorized capital. 50,000 shares of 10 rupees each, 5 lakh. Next, issued capital. 24,000 shares of 10 rupees each, 2 lakh 40,000 rupees. Next, subscribed capital. In this 24,000, 16,000 shares are issued to public and 8,000 shares are issued to a seller who is selling building to the company. So show that clearly here. 8,000 shares of 10 rupees each issued as a fully paid up for the purchase of building. Next, 16,000 shares of 10 rupees each. So 8,000 into 10, 80,000 rupees. 16,000 shares into 10 rupees, 1,60,000. 80,000 plus 1,60,000. In outer column, 2,40,000 is subscribed capital. Next, called up and paid up capitals. In present problem, company called all the installments in current year only. Therefore, called up capital is same, 2,40,000. Paid up capital is also same because finally there is no call scenario here. Next, reserves and surplus. Under reserves and surplus, capital reserve balance 1500 we have to show. So liability side total, only these two amounts we should consider. Paid up capital and capital reserve amount, total 2,41,500. Come to asset side. Company purchased building for 80,000 rupees. Show that building value 80,000. Cash at bank 2,41,500 minus 80,000 is equal to 1,61,500. If you prepare cash book roughly by posting all the journal entries which we wrote, you will get the same balance. So asset side also total is same, 2,41,500. Take a screenshot of balance sheet. This is the end of present video. Hope this video is helpful to you. Thank you.